Okay, so hello, Assalamu alaikum students. This is your teacher Azka and I teach business and accounting to the students. And my online classes has been started for October, November 2023 and May, June 2024 series. And also I am offline available, like I'm giving my physical classes in Faisalabad in Integrators Academy. So if you are living right now in Faisalabad, so this is very golden opportunity for you that you can take my classes, take my physical classes. You can contact on my number and reserve your seats. And if you are not living in Faisalabad, whether you are from Pakistan or maybe from any other company, so you can, country, so you can contact me on my number or you can DM me on Facebook or Instagram. So like whatever you want, or if you don't want to contact, if you just wanna leave comment under my comment section. So don't worry, I will read your comment and I will contact you personally and just reserve your seats. And if you want to take my classes individually, so I am available for this also. Okay. So we just started our May June 2023 past paper series right now, and this is our paper 4. Paper 4, you know that this is about the cost and management accounting. Okay, and this is our variant 2. Paper 4 code is 9706 for the A levels accounting, and this is May June 2023, and you have 1 hour to attempt this paper. Okay, so let's go towards our question. So here in this video, in this specific video, I'm going to solve question number 1, and later I will make a video on question number 2. So we are just going to solve only question number 1 in this class. Okay, and this is the topic investment appraisals. Okay, so we have a source A for question 1. Okay, so let's read the question. Beachside is a village with 320 houses. Okay, the continued existence of which is threatened by rising sea levels. And the residents approached Hiram, a building contractor, to suggest a project for building a sea wall to protect their village. Okay, so Hiram is a constructor, and because the people of village, they are afraid from the flood, so that is why they contacted to the Hiram to start a project, and project is about a building a wall, a sea wall to protect their villages. The cost to Hiram of building the wall would be $400,000. So it means that this is our initial investment, because this is the investment which Hiram had to have to pay if she, or maybe I think he is a boy. Okay, so Hiram have to pay this amount. Hiram have to invest this amount at the start of the year. So that is why we can say that $400,000 is our initial investment of this project. The local government was prepared to make a grant of 1,42,000 in year 1. Okay, so it means that of course the government is also, you know, that the government always concerned that their local population, you can say they just want to prevent their local population from the floods. So that is why they are saying that they will pay 1,42,000 in year 1 as grant. Okay, so residents had together decided that each household would pay Hiram a fee of $200 per annum. So it means that every household would pay $200 per year to the Hiram for each of the years 1 to 4. It means that each and every year, every household will pay $200 to the Hiram in every year. Okay. So the residents believed that the village would become a more desirable place to live if the wall was in place. So they therefore told Hiram that they expected that 80 new houses would be built in each of the years. Okay, so they want 80 new houses in each year, like they want 80 houses for every year in year 2, 3, and 4. Okay. The information we just read, this was about the year first, but now they are requesting to Hiram that they want 80 new houses every year, and it should be start from the year 2, year 3, and year 4. They are not talking about the year 1. And that the new households would pay the same fee. What was the same fee? $200 fee per year as the existing households. There would be no cash flows after the end of year 4. Okay, like there are no cash flows, no inflows or no outflows. Okay. So now what is the question? So in first question, as you can see, in part A, they are asking to calculate the net cash flow. We know that what is the meaning of net cash flow. We can easily calculate the net cash flow. We will minus the net inflows from the outflows for each year. Okay, for each year and in total for the project. Okay, so this is the method. If you already studied this chapter, so you probably know better that what kind of format and how to process, how to calculate the net cash flow for each year. So we will follow this format. So year zero is the year in which we are not getting any kind of inflows, like we are not getting any kind of cash. We are just investing in year 0, and that was 400,000. It was our initial investment. And year 1, we received 1,42,000 grant from the local government. And year 1 also we got $64,000 as fee. So how we just calculated this $64,000 as fees? So as you can see in this question, that B side of the village 320 houses, and every household will pay $200 per annum to the Hiram to constructing the wall. Okay, so it means that we have to multiply because every household is going to pay $200 per annum. 320 multiply 200. Okay, so if you multiply 320 into 200, so you will get 64,000 fee, which we have which Hiram have received in year 1, because in year 1 he is going to start to construct the wall, the sea wall, and there was 320 houses which already you can say that they already living in that side, on that side, village side. So it means that if every one household will pay 200 per annum to the Hiram, so it means that Hiram would have 64,000 total fee in year 1. Okay, so let's go to the question again. So as you can see, if we add 142,000 plus 64,000, so we have 2,06,000 in year 1 as inflows. Okay, cash inflow. Okay, so in year 2, you can see in question that 80 households requesting to, they were requesting to the Hiram that they want 80 houses in each year, and they would pay the same fee to the Hiram in each year and every household. So if they want in year 2, in year 3, in year 4, 80 houses in each year, okay, 80 houses multiply 200. So what would we have? 80 multiply 200. So we have 16,000 cash inflow in each year. Okay, so what was the total fee in year 2 which Hiram has received? That was $64,000. And now what we have to do is in year 2 we will add 64,000 in this fee, so we have 80,000 total cash inflow. 64,000 plus 16,000. 16,000 where I get from where I have gotten this number. Basically, they want 80 houses for each year and they will pay $200 to Hiram. So that is why if we will multiply it, so it means that we have $16,000 for each year cash inflow. So we would add this cash inflow into 64,000 because this is also the fee, and we are, because we are calculating the total, or total, you can say here the net cash flow for each year and in total for the project. Okay, so now, so that is why in each year we are just adding the previous pieces, because we are we want to get some, you can say, the total amount in each year. Okay, so in year 3, again, in year 3 again, Hiram have to build 80 new houses, and in year 3 also she will receive $16,000 as fee. So if we add 80,000 plus 16,000, so we have 96,000. Okay, and in year 4 again, in year 4 again, Hiram have to build 80 houses and he will receive $200 from every household. So again, 16,000 would be added back into, 96,000. So 96,000 plus 16,000 is equal to 112,000. So now minus 400,000 plus this, plus this, plus this, plus this. So we have $94,000 as net cash flow. Okay. So we have $94,000 minus 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 400,000 plus 206,000 plus, because this is the inflow, so that is why we are adding these amounts, 80,000 plus 96,000 plus 112, so it is equal to 94,000. So this would be our net. Okay, so we have 96,000 as, 94,000. 94,000 as net cash flow. Okay, so now let's move towards the second part. So in second part, they are asking to us that the accounting rate of return, like ARR, sorry. So in order to calculate the accounting rate of return, so we have to follow this formula. As you can see, this is average annual profit. So we know that average annual, for to find the average annual profit, we have to divide the net cash flow or you can say the profit divided by 2. So we have $94,000. 94,000 divided by 2. 94,000 divided by 2. Not 2, actually, sorry. 94,000 divided by number of years. If we want to find the average annual profit, so what we have to do, we have to divide the profit, or you can say the net cash flow, on number of project, years of project. So we know that the year of this specific project we have is 4 years. So it means that 94,000 divided by 4. So we have 23500. So as you can see this here, 23500. Okay. So after that, we have to find the initial investment, average initial investment, average initial investment. So to find this, we have to divide initial investment by 2. Okay. So initial investment was 400,000 divided by 2. It's mean 200,000 is our average initial investment. So just multiply your average annual profit with 100, because we want our answer into percentage. So that is why we are multiplying it by 100 divided by average initial investment. So it was 200,000. So we have 11.15%. It means that we will get 11.15% of our return on our investment every year. Okay. So now move forward to the next question. Okay, so here you can see Hiram cost of capital was 10%. The relevant discount factors were as follows. So we have this discount factors. So what is basically discount factors? The net present value. So whenever we are going to invest in any project, the business is more concerned about their, you can say that their investment. They just want to know that if they are investing specific any amount in specific year, so what would be the, you can say, the value of their return in the future. Because in the future you can see that the money is the money you have invested in this year would not be the same in you can say the future years, you know. So the net present value, what the net present value do? Net present value, or you can say the net present worth, applies to a series of cash flows, series of cash flows, series of cash flows occurring at different times. Different time means this is occurring in first year, in second year, in third year, in fourth year. Okay. The present value of a cash flow depends on the interval of time between now and cash flow. It also depends on the discount rate. This is our discount rate. Like these are basically our discount rate. Okay. So net present value accounts for the time value of money. That okay, if this is our cash inflow in year 1, so what is basically its worth in real world? Because in year 0 we can see that okay, we will have these inflows in upcoming years. But in year 0, we can see, okay, in year 1, maybe we will get 2,06,000 as return. But maybe the value of your 2,06,000 would not be same in year 1, because the value of your money may be decreased by time. So that is why we are curious to know that what will be the value of our inflows in the upcoming years. So in this case, we use the net present value because we are curious to know the worth of our inflows in the upcoming years. Okay. So Hiram's cost of capital was 10%. The relevant discount factor as follows, as you can see. For year 1, it is 0.90909. For year 2, this, and this. So in this question, examiner are asking us to solve or to find the net present value of the project. Okay, so in year 0, if we are investing 400,000, so it would remain the same. There will be no discount factor used, because discount factor is just using to know the worth of your inflows in the upcoming year. So that is why we are going to calculate the net present value of our inflows from year 1. Okay, so in year 1, we were getting 2,06,000. So we will multiply it by the discount factor. So this is our discounted cash flow. In year 2, 80,000 multiplied 0.826. So we have 66,080 discounted cash flow, and so on. So after that, we will have the net present value when we minus all. 1 second. So when we will minus 4 lakh minus this. So we have net present value of 1926 discounted cash flow. Okay, so this is our answer. Okay, so now moving forward to the other question. So here is some additional information. As Hiram remained undecided as to whether he should proceed, like the project he has received now. So he is just undecided. He is confused that whether he should proceed or not. So the residents made a further suggestions. In addition to the sea wall, Hiram could build an extension to enable the local fishermen to land their catches more easily. Now they are offering him one more project. Like they are adding, you can say, the one more project into previous project. So this would add $20,000 to the building cost. So it means that he would have to invest 4,20,000, okay, in the initial year. There's 4,20,000, because 4 lakh was for the previous project, but now they are saying that they want one more project from him for the fishermen. So that is why they said that they said that they want one and like another project from him. So that is why Hiram have to invest $20,000 to build the one more wall for the fishermen's, and its building cost is $20,000. Residents believe that if the extension was built, it would result in further increase of another 20 new houses being built in each of the year 2, year 3, and year 4. So previously it was 80. but now they are saying that 20 new houses are being built in each year. So now what we have to do is, okay, so calculate the change in NPV which would arise if the extension was also built, and your answer should indicate whether the change is an increase or decrease. So in year 0, our cash flow would be in negative, which is 4,20,000. Okay. 2,06,000 for year 1. And now previously it was for 80,000 fee, but now because they want 20 new houses built in each year, so previously it was 80 plus 20 in year from year 2. Okay, from year 2. So previously it was 80 houses, but now they want to add 20 houses in new project in their like in extended form of project. So it means that they want 100 houses now. Okay, like they add 20 new houses in it. And for 20 houses, they would pay the same fee, which was 200 per annum. Okay. So 20 multiplied 200, so we have 4,000. So what we have to do is, the cash flow would be, will be the cash flow will same, but we add 4,000 extra into this. So in year 1, he would build 20 houses and will receive, and they would have been receiving $200 as fee. So it would give us 4,000. So this would add in 80,000. So it would give us 84,000 in year 2 fee. So in year, sorry, it was year 2. In year 3, he would build 40 houses, 20 plus 20, multiply it by 200. So it would give us 8,000. So this 8,000 would add in the previous fee. What was the previous fee? Previous fee was 96,000. Okay, so 96,000 plus 8,000, this would give us the amount which is 1,04,000. And in year 4, 20, 20, and again in year 3, he would complete 60 houses and he would receive 200 from each and every household. So he would have $12,000 as fee for the 4th year. Okay. So what was the previous project's fee? Project fee, it was 1,12,000. 1,12,000 plus 12,000. Because this is the new, you can say he would have this amount for fee which he would receive in order to make the another 60 houses till year 4. So after that, we have $1,24,000 as cash inflow. So this is our cash inflows. Okay. So after that, our discount factor would be the same, 0.9009, 0.909, 0.826, 0.751. So this would same. And after that, discounted cash flow, what we have to do is we will multiply 2,06,000 with this, 84,000 with this, 104,000 with this, and this. So we have these discounted cash flows. And after that, when we are going to minus all these discounted cash flow from our initial investment. So we have the net present value for this 566, but they are asking calculate a change in NPV. So what was the change in, and what is the change in NPV? So our previous NPV was 1926. This is our previous NPV 1926, and for this additional project we have 566 NPV. So, and this is a negative answer basically. This is a negative answer. So when we will minus these, so we have 2492 change in NPV for the new additional project. This is our new, or you can say the change in NPV. 2492. Okay, so we have done with our practical parts. Okay, so now we will do the second question in our second class, but till then I'm going to say goodbye and we will meet in another class.